Hi everybody, Alex Deploy here from Expert Forex, and I'm quite excited about this video because I'm going to show you a perfect robot, one that has been designed to never make a daily loss. These are not idle words. I'm going to be showing you lots and lots of examples of that. So what do I mean by not having a daily loss? So what you do is you look at the statistics about your trading or your trading robot, and you see something like this. So you see months, never lost a month. Weeks, never lost a week. Then you have days, and in this case there were 2 losing days out of 122 traded days. So that's what I'm talking about. It's about getting this figure, this number down to 0. But then you have to say, how serious are those 2 losing days if you're only losing $30 compared to the gains that you're making? So let's have a look at this almost perfect robot that never has losing days. Now, although this robot is perfect, the market that we're trading in is not perfect. And that is why you saw those 2 negative days that only generated minus $30. It is because the market has something called slippage. And I'm going to just talk about slippage because you need to understand you could have the most perfect robot and slippage can cause it not to work properly. And in this case, that's in fact the case. It has been designed never to have a losing day, and it actually does that, but slippage causes these problems. Okay, so let's have a look at the causes of slippage. Firstly, there's a lot of fast-moving markets. By that I mean the price moves 20 or 30 pips within a minute. And that generally happens when there are announcements or events that cause a panic movement in the market. So if you have a stop or a target that's in the way of the price can jump over that stop to the extent that the broker doesn't even recognize the stop afterwards. Or it could jump over the target, which in fact might be a good thing. You might actually make more profit. So fast-moving markets cause problems with entries and exits, and they are around. You cannot avoid them. Robots ignore them because basically there's a 50-50 chance that you're going to be positive and a 50% chance that you're going to be negative. So not something to lose sleep about, but it is inherent in this market that we're trading in. Then variable spreads are problems because you might enter using a particular spread and exit using a different type of market situation, or the vice versa, and the spreads can cause slippage. So you might have put your stop at a certain price level, assuming a spread of, say, 1 on the euro, and then something happens and suddenly the euro spread goes to 3. Obviously, when it hits your stop, you're not going to get your 50 pip target that you anticipated. You might get a 48 pip target. So variable spreads are, again, part of the situation we trading in. In my days, there were only fixed spreads, so it's a lot easier, but just accept them for what they are. Then poor internet connections can be a problem, and it's not a major problem because these days everything is measured in microseconds, but certainly you have to realize that the price feed comes from somewhere in the internet into your desktop, on your desktop, and then you make a decision, or the robot makes a decision to trade, and then that decision has to be communicated back to your broker, and slippage can occur between that communication process. Again, nothing that you can do anything about or worry about, but certainly if you have got a slow internet, you need to consider a VPS or something like that. Right, then the next thing is market gaps, and market gaps occur all the time and people don't even know that they're happening. For instance, certain brokers close down for 10 minutes at midnight to reconcile their books and get ready for the next trading day. Now, during those 10 minutes, you cannot trade. So a lot of people don't realize that, but it happens with most brokers. They close over midnight. In fact, go and have a look at your trading times. You might get a surprise on that. Market gaps happen over weekends. For instance, the price closes on a Friday or Saturday morning and then opens on the Monday morning at a different level. That's a price gap. There's no trading that's occurred. You can't influence anything, but there might be a 50 pip move in the market. So price gap. So we're dealing here with a really imperfect market. Then you have broker requotes. Now, when we evaluated whether to go for MT4 or MT5, this was a major issue because MT5 was created for share trading. And share trading requires a buyer to be in place for you to sell or a seller to be in place for you to buy and that kind of thing. So the brokers will invariably requote and do all kinds of things when you're processing a transaction. And they didn't change that for Forex. So there were delays and we actually tested that. We put MT4 on one side, MT5 on one side, generated the same trade, and there were some significant like seconds difference between the processing of those two transactions. So then I decided never to touch MT5, and I still haven't, and I don't know if that order processing has improved, but I don't actually care. I'm pretty happy with MT4. I don't want to take a chance with MT5. So order processing can be a problem. Now, there are other factors like poor broker practices, like FXCM in the US was fined very heavily for manipulating the market and that type of thing. So there are other factors. But on the whole, what I've now discussed explains the $34 slippage that has happened on this perfect EA that we've designed, never to have a daily loss. So I hope you appreciate that the examples that I'm going to show you are not going to be perfect. There is slippage involved, especially when traders are using index trading. For instance, index trading is different to Forex. Forex trades 24/7 for 5 days of the week. Index trading has certain market times, and You'll also get a shock if you're going to have a look at the market times for index trading. And if you're trading a robot, what must the robot do between the time that on a Monday when the index market closes and reopens in your broker account? It's not all broker accounts, but your broker account might have a big gap there. So index trading, for instance, is another market gap problem. And that's why I personally stay away from index trading, because Forex trading has a continuous trading period. Index trading has these daily gaps there. And there are other instruments with those kind of gaps. All right, so now I hope I've answered the guy that says, you told us that you never have a daily loss, and there is a daily loss. The robot is perfect. It is programmed not to have a daily loss, but these slippage issues can occur and cause daily losses. But you will find that those daily losses are minimal compared to the gains that you make at the same time. So let's go and have a look at this perfect robot that never has a daily loss. Okay. Of course, what I'm talking about here is the profit retriever that makes profit no matter which way the price moves. Now, I should have also put in there that never makes a daily loss, which I can actually say, but because of slippage, I can't make that statement. But the robot, in fact, has been designed never to make a daily loss. Now, if you want more information about the robot, please go and visit this page. Read everything on this page, including watching the videos, because you need to be informed exactly how this robot works. It is the most perfect robot that you could possibly get in the Forex market. A link to this page will be in the description of the video as well as in the commentary of the video. And why I'm cutting this short is I want to show you examples of the profit retriever trading for extended periods and not incurring these daily losses. So let's go and have a look at these examples. Okay, on your screen you can see our link to success service, which is a service that you can link your trading account to profitable robot traders. Now, the beauty of this service is it creates trading records that investors or traders can have a look at to see how the robot has been traded over a number of weeks or even a number of months, and soon we will have a number of years. Now, on this page is a list of linkable accounts, and there you see it on your screen, and you can see some of them have made incredible returns over the periods that they've traded, and each one has a different period. As you can see here, we've got days, and some have been trading for a long time, some for shorter times, and so on. So this is where we have established trading records that we can use. Also, as you can see here, the robots used to establish these amazing results are mainly the profit retriever. If we go down here, there are a few other robots, but mainly the profit retriever. And I'm going to focus on the profit retriever because that's the one that's been designed not to have daily losses. So, okay, let's go and have a look at the first one, link 8. Which has been trading for 150 days and has produced 800% return. And I'm going to click on this link, and it brings you to the FX Blue analysis of the actual account. Now, if we want to have a look at what I'm talking about, let's go and have a look at the stats on this account. And here are the stats on the account, and let's now look at the number of negative days and positive days, and so on and so on. So here we have, it's been trading for 6 months. No negative months. It's been trading for 19 weeks. There's been 1 negative week, and we'll talk about that. And it's been trading for 59 days, and there have been 6 negative days. Now, remember when I spoke about the shrinkage problem? This EA trades an index, and as we know, the indexes don't trade 24/5. So there are lots of gaps. Indexes are very dangerous, but in this particular case, obviously the robot has done pretty well. But then we've got to look at the impact of those 6 losing days, and you can see the worst losing day was $250, whereas the best one was $5,000. So the difference between those negative days and the winning days is huge. The same thing with the week. The worst week only had a $64 loss, but it had a $13,000 gain. So again, you know, you've got to look at these things in reality. Although statistically it says we've had losing days and losing weeks, they have not hurt the account, and those losses are due to slippage, not due to the robot that's being used. It's due to the instrument that's been used. Okay, so let's have a look at the next account. There's link 24. That's been trading a little bit longer. It uses a currency, and let's go and have a look at those statistics. Okay, again, nice statistics here. A success rate of 66%, and let's go and look at the stats. Okay, now here's an example where the stats are a lot better because we're using a more stable instrument to trade. This one has had only 2 losing days over a period of 215 days. Not bad. And again, we have no losing months, we have no losing weeks, we have 2 losing days, and the worst losing day was $34 compared to the best gain of 2,500. So again, the losing days did not damage the account and have essentially happened due to slippage. Okay, let's have a look at the next one. Now, this account has been going for 80 days, and again, no losing months, no losing weeks, and no losing days. Here's a perfect example of using a currency to trade, and there is a setting that you can set a little bit more aggressively to have no losing days, and this particular link is obviously using that. So here's a perfect example of what we're talking about. So we're getting close to this ideal, perfect robot that never makes a daily loss, and here's a prime example. So let's have a look at an account that's even older than that, and here we have one that's 337 days. It's almost a year. As I said, we're soon going to have yearly statistics for you, and let's go and have a look at that particular one. Now that one trades gold, which is a non-forex instrument, more risky, and let's see at the statistics. Nice robust account. There we have a positive floating profit. We have a success rate of almost 70%, and let's have a look at the stats. Okay, and here it says the days are 343 days, and there have been one losing day, and it made a very small loss on that losing day. So 12 months, no losing months. 34 weeks, no losing weeks. And then 91 days, one losing day, which was very small. Now you'll see that the number of days here don't correspond with that, and that is because FX Blue measures only days where transactions have occurred. So if a transaction happens on the Monday and it's waiting to hit its stop or target and only hits the target on the Friday, FX Blue will only record 2 days of trading for that 5-day week. So that's why the stats look a little bit skew, but the main point here is there was one losing day, so out of 343 days of trading. Again, coming close to the claim that we can make that we never have daily losses, and that if there are daily losses, they are mainly due to slippage. Okay, by now you should be getting the point, so I'm only going to look at another one or two, but you can come down to this page and do exactly what I'm doing now. Go through the accounts and see how well they do in terms of daily losses over the period that they've been trading. So let's choose another one, and just above it there's another long period, 281, using the US 30, so it's a non-forex one. So again, let's have a look at it as an example. Again, trading pretty well, 69% success rate. You'll see that the profit retriever, that is more or less, it's between 65 and 75 are the success rates constantly for this EA. And here we go again, and we've had 285 days of trading. One of those days were negative, and it was negative by $3. I'll ask you with tears in my navy blue eyes, $3 negative over a period of 285 days. No losing months, no losing weeks, one losing day. Now you have to admit that this is an exceptional robot. Okay, I think I've made my point in this video that we have created a robot that has a above average chance of never creating a negative day. And if you want more examples, please go to this page. A link to this page will be in the description of the video as well as in the first comment of the video. And go and play around with all these linked accounts, and you'll see that statistic is amazing for all of the accounts. And that is why the success of this profit retriever has become the basis of our linked account service, where the monthly gains are just astronomical. I mean, this one, you can't read it, 160%, 85%, 60%, and so on. So the gains are actually amazing, and that's why we're allowing this service where our clients can link their own trading accounts to these trading accounts and experience the returns that are being generated. It's a very simple process. All you need is your own broker account. We supply a robot that you put on there, and that robot will go and fetch all the trades made by the service provider that you select. So just to recap, there are two ways that you can benefit from this fantastic robot. You can buy it outright And I have shown you the page that you can go and read about that, and the links will be in the description and commentary of the video. You can buy it outright, or you can join this linking service. The linking service currently has a 14-day trial. You can go and do that trial for $1. So you can go and demo trade this service. It's a extend and experience these returns that traders are getting. And here we are. You just go down to the bottom. For a demo trial of 14 days of this robot, you only pay $1 to test the system, whether it is suitable for you. If the linking service is not suitable, you can always buy the robot outright and use it. We do supply some of the settings that are used in the linking service to owners of the Profit Retriever. Now, I hope you've enjoyed this video, and I hope the efficiency of the Profit Retriever has actually surprised you. And here's a challenge. See if you can find any robot anywhere in the world that has that kind of efficiency, that just does not have negative days. And when there are negative days, they're small and they're caused by slippage. So from me, Alex Employee, cheerio.